Hello, good morning and welcome to our morning call. It's November 21st. It's the final full day before the break in the US. I think this year the Thanksgiving holidays can't come soon enough for many in the markets. We're continuing to see weakness across almost all asset classes. The stock market continued to trade lower yesterday in the US, and if we open up with this chart here, you can see the bellwether Apple is really continuing to be under pressure, and that's the implication of that is also being felt across suppliers to Apple across the world. But you can see Apple has now lost almost a quarter since early October, and it's one of the key reasons why Apple the Nasdaq is continuing to be driven lower. What we also had yesterday was another extension to the downside in crude oil. It's creating some nervousness. Obviously, the energy sector is being hit. On the back of that, we're seeing some movements in the currency. Matthias will just talk about that in a sec. But if we take a look at the next chart, you can see how Brent crude oil, after consolidating a bit, we just fell out of bed once again yesterday. And you can see on the chart here that we finally reached some key levels now. 61.70 was the previous low, but it's also the trend line from the low we made back in 2015. So this is really the level that needs to hold. We did see a bounce overnight, and that was courtesy of the American Petroleum Institute. They came out with their weekly surveys, and you can see the table at the top there that they showed the first cut in crude oil stocks. I think that's the first cut in 9 weeks. So that has helped the market just to recover somewhat this morning. So this risk off, risk on sentiment is really, there's quite a link here between the oil market and the rest of the market. But we saw some currency movements as well yesterday, and I suppose the NOK is under pressure from this.
Exactly. So NOK is under pressure, CAD is struggling. So Euro NOK is up quite a lot over the last week, and volatility is following spot higher. So vol's higher as well.
Yeah, because it has really taken the market by surprise. That just a couple of months ago the market is worried about 100. Now it really is questioned where's the bottom in the market. Another sector that's also attracting some attention is the bond space, because we are seeing the government bonds finding a bit, especially in the safer ones. The US is over the past couple of days here. But if you look at the chart, you can see the high yield space is starting to come under pressure. There are some reports about high yield corporate bonds in Asia, how much they have been under pressure recently. But we can see just over the past couple of weeks here, these are two of the ETFs reflecting these markets. The high yield corporate bonds, which has started to weaken. We're down on the year now, and the government bonds, which has been under pressure up until recently, has started to recover somewhat. But overall, the talk about safe haven, there's obviously always the question about what currency to pick, and is there any movements going on there? And Matthias, the volatility seems to be showing some nervousness at least.
Yeah, we start to see a little bit of move in FX now, far from any panic move or anything like that. So over the last days, it's been more of a dollar move. We haven't seen much of the safe haven move that you maybe think you should see. Gold is stable. Yeah. We saw a little bit of Swiss move yesterday, but dollar yen, for example, can't really get away from the 1250 level that we've been trading at.
You brought a chart here just to give you an idea about the implied volatility.
Yeah, so this is just the currency VIX chart. So we're looking at the implied and the realized. So we see that the blue one is the 1 month realized volatility, and we start to see a little bit more of a move in the FX market. Most of this is due to the big sterling's move we've seen over the last months, of course, but it's a general pickup in moves. Implied vols is still going higher, and we're trading with a quite big risk premium in the FX market.
So there are expectations of more to come there at least. I think just staying with sterling, you mentioned that yourself. You just taken just give us an update on cable there as well.
Yeah, exactly. So I have another chart showing cable. So big move in cable vols over the last days or last week. 1 month coming off a little bit now from the highs. We peaked at 15.5 last week, and we are down to around 14 vols in cable 1 month. The blue line is showing the risk reversal, so it's still huge demands for sterling puts. 1 week is down quite a lot as well, peaked at 17-18% last week, and it's down to 13% now. So that's because we it looks like May has avoided a no confidence vote. There's no immediate risk in the short term, so we're waiting for the next vote on the Brexit bill.
Yeah. It seems like that's going to be the next trigger point, but obviously as the volatility there is showing that there is still a lot of uncertainty, especially within the government in the UK. So the market is taking its precaution as according to that. Just taking a look at, we talked about safe havens. I just brought you a chart here just to give you an idea about some of the movements, because it looks like right now a safe haven is mostly a market that doesn't go down, at least try to stay normal, stay relatively stable. We've seen that in gold, which is the bottom one. It's hovering around this 1222 level. It's holding in between the 1210, 1240 range. But if you look at 10-year notes, which is the blue line, it's come down back towards the 3% level. So at least there has been some bids coming back into that market. Trump yesterday was out calling for a rate cut. That is, he's obviously also starting to get a little bit concerned about this weakness we continue to see in the US market. So he's been calling for a rate cut. JP Morgan, they're out telling their clients that they should brace themselves for another 4 hikes next year. So that's on the aggressive side. So at this stage, any change in the outlook from the Fed could give the market quite a bit of a boost, because while we potentially some hope that they will start to post their rate hikes, the signs of that happening has not really fully emerged just yet. So that really is going to be a key focus over the coming weeks ahead of the December FOMC meeting. I think I'll just finish off with another chart which is telling a slight different story, because if you look at the copper here, if the worry is trade wars and global growth, you would imagine that industrial metals led by copper would be finding it difficult to stay up. But they have actually been trading relatively quiet for the past months. After the trade war broke out back in the end of Q2, the market has actually been trading sideways, and it's not really showing much signs of stress at this stage. So the copper market is not really telling us a story about a slowdown just yet. Potentially could be also related to the fact that there is expectation that China will step in and increase infrastructure spending. Potentially we could see that in the US as well, but at least copper for now is holding steady. Right, as I mentioned, it's the last day before the Thanksgiving holiday. The calendar today, we have a few US numbers to get through. Durable goods, kicking off with that. Then we got existing home sales, a very key number as well, given the weakness that we've seen there recently. Michigan sentiment also later in the day. And then we got a speech from Bank of England's Carney, which the sterling market will be keeping a close eye on. And then Thanksgiving tomorrow, many markets will be trading very calm or quiet on Friday, so we got a long weekend ahead of us, especially for those stateside. Thank you very much. We'll be back again tomorrow with our morning call. Thank you.